Hello, everyone, and welcome in a new daily live analysis session brought to you by the market research team at OnePro. This is Mohanad Yaoud, and today, as usual, we're going to have a quick look on the markets. We have some important news to look at and to await on the economic agenda for today, as well as some expected moves technically on the markets. Although markets are not so pretty much good at the moment or during this week, we are having weak movements or weak momentum overall on the US dollar, gold, as well as most of the major currency pairs. However, we do have our scenarios ready for an expected technical move, especially on the yen pairs. So let's have a quick look on the markets. Of course, if you have any questions, please leave it in the comment section below, and I'll make sure that all of your questions will be answered during this live session. So let's start. Starting with a quick look on the economic agenda for today, the Tuesday, 15th of August, we can see that there is a lot to discuss here today on the economic agenda. First of all, the European session is kind of a weak session today because we are having a couple of holidays, especially in Italy and in France. So weak volatility and weak liquidity during today's European session. However, going forward to discuss the Chinese data that were basically by the beginning of the Asian session, and the data came out negative. It was bearish for the Chinese yuan. And speaking of which, the most important is the retail sales July on a year-on-year basis or year-over-year. So the previous reading was basically 3.1% for the month of June, and this is a year-over-year reading. So we basically compare July of this year with July of the previous year. So for June, it was 3.1%, and for July, it came lower than expectations as well as lower than the previous reading, which was basically 3.1, and the expectations 4.5. The reading is very, very bearish for the Chinese yuan, and it confirms the outlook overall that the consumer demand in the Chinese economy is really weak. And as an emergency decision from the Public Bank of China after the data was basically released, we had an emergency rate or interest rate cut on one of the prime loan interest rates in the Chinese economy. So that's the first thing that we're going to discuss regarding the Chinese data. Retail sales were lower than expected and lower than the previous reading, and hence we had an emergency rate cut from the Public Bank of China. The other indicators are basically not so bearish, but speaking also as well for the fixed asset investments, which is this one. Let me get it for you on the screen. So the fixed asset investment as well year over year for July went lower from 3.8%. Expectation was basically that the same number will be announced for July. However, it also came as bearish number 3.4%. By the beginning of the European session, we had data from the British or for the British pound from the United Kingdom, and most of which is basically, we cannot say bearish, but it supports another rate hike by the Bank of England. Why is that? First of all, look at the unemployment rate for the month of June. The previous one was basically 4%. Right now it's heading higher for 4.2%, which is a little bit good enough for the Bank of England. I mean, the central banks during the contractionary policy, they don't really want to see the unemployment go higher, but it is a side effect of raising interest rates. So this means, at least to the Bank of England, that yeah, we might be going for more tightening because unemployment rate is already going higher. However, for the claimant count change, you can see it's went higher to 29,000 new claims, and this is similar to the initial jobs claims from the US economy. The only thing that basically supported the pound, because so far the claimant count change and the unemployment rate doesn't really support an interest rate hike. However, look with me at the average earnings. It's well higher above the previous reading as well as higher than the expectations. And it definitely means that the average wage in the United Kingdom is getting higher. This should support consumer spending and consumer demand, and this might mean that the inflation will not be so easy to control. So those two numbers coming out higher than the expectations and higher than the previous reading personally supports to me. I see that the Bank of England should hike interest rates even further in the upcoming meetings. That's why we had an upward move on the British pound as soon as the news were released. Markets completely neglected, let's say, the claimant count change or the jobless claims, as well as the unemployment rate, and they only focused with the average wage. This supports an interest rate hike, and that's why we had an upward move. Having also a look on the ZEW economic sentiment for Germany and for the Eurozone, it's basically better than expected. Both of them are better than expected, although they are still in the negative zone, however, slightly showing some improvement on or for the month of August. So that's the previous numbers that were already released during today's sessions. What about what do we expect? The key thing to look for during today's session is basically the retail sales and the core retail sales from the US economy, because the retail sales is a leading indicator for the inflation. I mean, it always shows if there is any inflationary pressures in the economy or not. So markets will be really reacting to the core retail sales to be announced today at 12:30 GMT time. We also have some CPI numbers to be announced from the Canadian economy, core CPI, and the CPI on a monthly and a yearly basis for the month of July. And we also have the median, the trend CPI to be announced today from the Canadian economy. Other than that, there's nothing pretty much that we should await. So be aware that by the beginning or just about around the beginning of the US session, we'll be having some strong movements, strong volatility. We have good news, and we will see what will happen and how it will affect the markets. In order to know that, let's have a look on the technical side of the market. What does the charts tell us? If we have any patterns to trade, what are the best trading opportunities for today? Let's have a look on the technical analysis right now. Starting with the US dollar index here, and to be honest with you guys, the markets are giving pretty much good signals, whether it's going long or going short on most of the major currency pairs. But the problem is there isn't enough volatility or enough liquidity to start those moves. So speaking about the US dollar, the US dollar is still trading on a daily time frame inside the downward price channel or the bearish price channel that we have been talking about a lot previously. And here's the middle line. You can see it was respected more than once. So here it was acting as support, tiny resistance, another support here. So this is a great price channel to trade, and we have been trending higher on the US dollar, definitely to target the upper limit of the price channel as well as a previous resistance level, which is on the daily time frame. And this is exactly the resistance level that we are looking at. I never basically trade on a single resistance or support level. It's always a zone. So the zone on the US dollar of resistance is around the 103.50. This is where I expect some bearish price action to kick in on the US dollar and start a downward move. The momentum overall on the 4-hour time frame is not so good. We have already reached the levels of resistance or starting to reach the levels of resistance around 103, and pretty much the dollar has been doing nothing for some time now. And this is the problem. I mean, I'm definitely short the US dollar, but when will it move? When will it show this bearish price action? It's only a matter of time, and I do really hope that we see this by today's retail sales announcement. The same is basically on the euro versus the US dollar. We had our support levels around 1.0920, our resistance 1.1040. We initiated a false breakout yesterday. We saw this false breakout to the downside. How did we know it's a false breakout? If you guys follow us on our daily analysis or during this live session, you will always know that we do know that the false breakout takes place on a bullish divergence. So although prices were going down, the euro were heading down to break the support level. However, we had this bullish divergence. Let me rewind the prices for you. Yeah, here it is. As prices were going down, okay, the momentum showed that we have a bullish divergence. So it's a definite signal for me that this is just nothing more than a false breakout, and we should respect those support levels and trade above one more time. And here we are. We are currently trading just inside the support levels, and I do really believe that the euro should be heading higher. And our targets should be this previous high and the one before. So 1.0960 as well as 1.10. And 1.9060. Those are my targets on the euro versus the US dollar. The same as well applies exactly on the pound. It was a brief, very brief false breakout to the downside. How did we know it was a false breakout? Again, the divergence was basically bullish. It didn't support any sustained downward movement. We are still in the sideways range. And yes, we do expect to reach this previous high of 1.2740. And then the major top, or the major high, around the 1.2790. This is what we will be looking for. 790. Those are my target levels on the euro as well as the pound. The dollar yen is doing pretty much nothing. We are still trading around the levels which Bank of England is not so happy about. We spoke about this yesterday. We mentioned that those levels previously saw intervention by the Bank of England to support the Japanese yen because it was weakening well above the limit that they would be happy with. Today, just around 2 hours ago, we had a statement from the Bank of Japan or from the Minister of Finance, the Japanese Minister of Finance, Suzuki, who mentioned that the rapid movements for the weakening of the Japanese yen is not desirable. This statement has been said, I believe, twice or three times before in history, and every time he says this, within 48 hours, you see a huge upward move on the Japanese yen because the Bank of Japan always supports the currency when this happens. So you can see that, yeah, we are edging higher. You might think on the 4-hour time frame, it's an upward trend. Never buy the dollar versus Japanese yen. Or let's put it in another way, don't sell the Japanese yen versus any currency whatsoever. We might see at any time an intervention by the Bank of England. We will have this slump to the downside. I mean, more strength on the Japanese yen. And of course, all of the currencies against the Japanese yen will see or witness a downward move. So if you want to go short on the dollar yen, pound yen, euro yen, whatever it is, it's a good option. However, don't go short on all of those. I mean, yeah, it will, of course, leverage your profits. However, it also increases your risk. So do your research either on the dollar yen, have a look on the euro yen. It's not something I often trade, but yeah, technically as well, it's heading lower, bearish divergence, trading near its highs for how long? The weekly time frame. The euro versus the Japanese yen, it's trading at levels never seen since September of 2008. This is something not to go long at. Definitely not a level that you should buy at. However, you should wait for the downward move on pound yen, dollar yen, euro yen. The pound yen as well is still at the resistance levels and also trading near its highest levels in so much time. Also expecting this Bank of Japan intervention to correct things. What's happening on gold. Basically, gold is currently trading around a key support level. You can see here. It's the 4-hour time frame. I think it would be more visible on an 8-hour time frame. You can see how well this level of 1902 supported prices previously for this upward move. In case, and this is basically a possibility, in case we broke below this 1902 support, the last support that should support prices should be the levels of 19 or 1895 roughly. So this candle, this engulfing candle that took place on the 29th of June, we never visited this candle again. It supported a huge move on prices. We are going back again to test those levels with very weak momentum. So this is an area where you can go long on gold, or worst case scenario, you can add to your long positions from the level of 1895. Guys, it's not always 90% biased to a specific scenario. However, this time, all long gold. What's happening on the US crude oil? Pretty much nothing. We are still trading in a sideways range, very, very bad sideways range around the levels of 82.40, which we mentioned as a level of support on the 4-hour time frame. So it was a previously resistance broken above. It's now support. We haven't really made our mind yet, or the US crude oil hasn't really made its mind whether has it broken below or above. It's still in a sideways range, very bad sideways range around this level of support. So to me, the US crude oil should be neglected during this time, as well as the Dow Jones. Guys, we have been talking about this level of resistance on the Dow Jones for quite some time now, between 35,381 and 34,914. We mentioned this as a great resistance level on a great or a bigger time frame. We briefly broke above another false break. How did we know this is a false break? Look at the momentum indicators. It was a bearish divergence. So if you're breaking above a major resistance level on a bearish divergence, it's definitely a false breakout. And we went down. We are currently trading inside the resistance levels. On a larger time frame, I do really believe the Dow Jones is heading lower. So if you're a swing trader, short the US indices. If you're a day trader, you might want to wait a little bit for an extra confirmation of your entry signal. Guys, that was all for today's daily market analysis video, brought to you from Mohammed Yaoud, Head of Global Market Research at OnePro. Thank you very much for watching this, and please stay tuned for our daily live session tomorrow. Thank you very much. Please stay safe.